Every American parent tells their kids the same thing. I buy a house, it's the American dream. But in 2026, for millions of hardworking Americans, renting is actually the smarter financial move. Before you call me crazy, stick around, because these numbers are going to hit different. Hey, welcome back. I'm Jude. On this channel, we break down the money topics every American needs to hear. No sugarcoating, just real numbers. Today, we're tackling one of the most hotly debated questions in American personal finance. Is buying a house really better than renting? I'm going to walk you through the real math, the hidden costs your realtor never mentions, and the 4 situations where buying actually does make sense. Let's get into it. When most Americans think about buying a house, they think about one number, the monthly mortgage payment. But that's only one piece of the puzzle. Let's run the real numbers. You buy a $350,000 home, which is actually below the current U.S. median home price of $420,000. You put 20% down, that's $70,000 cash out of your pocket on day one. Your mortgage payment at today's rates? Around $1,800 per month. But here's what your realtor doesn't put in the brochure. Property taxes, the U.S. average is $3,500 per year. That's $292 every single month going straight to your county. Homeowner's insurance, required by every American mortgage lender. Average $150 per month. Maintenance and repairs. Budget 1% of your home's value per year. On a $350,000 home, that's another $292 per month. HOA fees. If you're buying in most American suburbs or condos, average $200 per month. Add it all together. Your true monthly cost of homeownership is not $1,800. It's closer to $2,734 every single month. Now let's look at renting a comparable home in the same American neighborhood. Average rent around $1,800 to $2,000 per month. No property taxes, no maintenance bills, no repair costs, no HOA, and most importantly, no $70,000 down payment locked up in a house. Here's the question every American renter should be asking. What happens to that $70,000 if you invested instead? $70,000 invested in a simple S&P 500 index fund, which has averaged 10% annual returns over the last 50 years of American market history, becomes $1,221,000 in 30 years. Over $1 million? And that $900 per month difference invested consistently into an American index fund grows to another $2,036,000 over 30 years. Combined, you're looking at over $3.2 million just by choosing to rent and invest the difference. Now, I want to be clear. I'm not saying no American should ever buy a house. Situation 1. You're planting roots for at least 7 to 10 years. Situation 2. You're buying in a low cost of living American market. Cities like Cleveland, Memphis, Indianapolis, or Detroit. Situation 3. Stability matters more than returns. Schools, community, family roots. These are real American values. Situation 4. You can truly afford it by American financial standards. Your total housing cost should never exceed 28% of your gross monthly income. The problem is that most Americans buy emotionally, not financially. Here's the bottom line for every American watching this. The rent versus buy debate has no universal right answer. But every American deserves the real numbers before making the biggest financial decision of their life. Number 1. The true cost of American homeownership is almost always $700 to $1,000 more per month than just the mortgage payment. Number 2, renting and investing the difference in the U.S. stock market can realistically make you a multimillionaire. Number 3, buying a home makes sense, but only when you're financially ready by American standards, planning to stay long-term, and have done the real math. If this video changed how you think about the housing market, smash that like button and subscribe for more honest American money talk every single week. Drop a comment below. Are you currently renting or paying a mortgage? I want to hear from you. See you in the next one.